Because of the recent changes in the tax law, you're going to be able to deduct your state income tax and your property tax up to $40,000 on your federal tax returns. And this is a huge change because they just raised the cap from $10,000 to $40,000. So you need to understand where to get this information in order to take advantage of this because you're going to be itemizing your deductions this year. You're not going to be doing a standard deduction. And for reference, I'm a loan officer. I help people do mortgages, but I look at tax returns all the time. So sometime in January, you're going to get a 1099 from your mortgage company. It's going to look something like this. And when you look at this, what you want to notate is how much you paid in interest to your mortgage company and how much you paid in mortgage insurance. These are two important numbers that you need to keep track of. The next thing you're going to do is you're going to look at your property tax bill, and it's going to look something like this. When you get your property tax bill, you probably didn't pay the property taxes directly. It was probably paid out of your escrow account. But you want to see how much your mortgage company paid to the county on your behalf. You should now have three numbers. The final thing is the W-2. On your W-2, there's going to be a bunch of boxes. One of them is going to say how much you paid in state income taxes. You want to jot that down. So at this point, you now have four numbers that you need to apply to your federal tax returns in an itemized deduction form. So you input all of those plus any deductions you might have. Other deductions could be charity or could be, I don't know, miscellaneous stuff, medical, whatever it is. But once you total all of that up, if those itemized deductions are more than your standard deduction, so for a married couple, your standard deduction is going to be $31,500. I'm guessing that if you pay state income tax and property tax and mortgage insurance and you pay mortgage interest, it's going to be more than that. If all those deductions add up to $50,000, that's going to be about $20,000 more than the standard deduction. And whatever tax bracket you're in, you're going to pay reduced taxes. It's important that you collect all those documents, that you total it all up, that you look to see what the itemized deduction looks like, and you apply it correctly so you can take advantage of the new tax laws. It's a huge game changer for many people.